In this video, I'm going to show you what separates the top 1% of agents from everyone else in 2025, how they're winning listings, building urgency, generating clients, while others are stuck waiting for rates to simply drop. This is the same strategy I broke down with Ryan Serhant, someone who's built one of the most powerful real estate brands in the entire world, and the same approach that's helped us close over $1 billion in sales on residential real estate. And this is exactly what's working for our thousands of agents that we're consulting through BAM. We're going to break down how to reframe urgency with today's buyers, what data actually drives decisions, and the biggest mistake agents are making with content and lead flow right now. So if you want to stay relevant, build momentum, and dominate in this market, this video is for you.
So first question for you. The market's shifting fast. I feel like there's so much noise. What do you think the key data points are that we should be watching? And I think more importantly, like how should we as agents be turning those metrics into real clear conversations with our buyers and sellers?
Yeah, on the macro, I'm looking at the job market because that's really going to be the only thing that pushes rates down. Every market on this call right now is different from each other. Northeast is wildly different than Southwest Florida right now, and so on. So if we're looking for affordability for the buyer demand, it's only going to come from the labor market. If you look at like residential construction, that's a leading indicator that a lot of these analysts will talk about. You hear the R word on, macroeconomics being floated out there as a fear. Even the Fed put it in their meeting minutes that were released yesterday, where they have this fear that the economy could weaken and there's a potential recession because there's too many unknowns. Ryan, you mentioned some of them, tariffs, all of those deals that are potentially happening or not happening are now off from a federal judge ruling yesterday. All that noise really doesn't matter. What matters is what happens with hiring. And we haven't seen that break, so we can't expect to see the rates come down. They're not just going to naturally come down. There's not a huge demand for our treasuries. You saw that just last week. They put out an insane budget that goes and spends more money, grows the deficit. People don't want to buy our debt, and you're going to see the 10-year go up. So as long as the 10 years elevated, we're going to have a rate that hovers around 7. Realtor.com is probably the most bullish that they say by the end of the year we'll get to 6. There's not a lot of indicators halfway through the year that we're going to get there. So watch the labor market. If you want any indication that the Fed will move on the rates and hopefully bring the rates down to that 6 sweet spot, that we do see activity in some of these slower markets start to open back up. So agents need to really pay close attention to what's happening in their market. There's the huge bifurcation going across the country, and understand that you're in an environment that is going to continue to have high rates and a suppression of transactions. The last 3 years, we've all dealt with, outside of a few markets, a suppression of transactions that we've been accustomed to seeing in the years prior. And adapting to that has been the biggest key for successful agents.
Yeah, it's something I say to our agents all the time, which is markets don't dictate your income, they dictate your strategy. So that's right in line with that. Okay, so you're watching labor, right? So you're watching the job market, you're looking at those numbers. Those are going to be indicative of what we think the Fed's going to do in probably September. You got a little bit of the midterm elections and some, politics that play into that as well. But you got rates high, clients are hesitant. Agents all across the country are trying to build urgency, right? That's how they sell. Buy now, don't buy in October. Sell now, don't sell in 2029. So then, given the market understanding that we have now, how do you recommend they reframe the conversation so that the urgency can land?
I mean, the conversation's got to be led with questions. I mean, you can look at any confidence score. Realtor.com had one this week that talks about the percentage of millennials in particular who are waiting for rates. And there's actually a very simple chart that they put together. It's like 1 out of 4 millennials are just going to wait for rates. You show your clients that chart and just ask the question, what is going to happen to that group, the 25% waiting for rates, when rates do come down? You got to ask a lot of what if, what would it take for you to make a move now, as opposed to the just buy now talk. When you frame it with a lot of questions that start with what, we can go deeper on where their hesitancy is, because it doesn't take longer than a 5-minute conversation for them to come to the realization that they'll be dealing in a higher demand environment if they wait with everybody else. But if we just say that statement, oh, it sounds salesy, it sounds pushy, pitchy. I'm looking for a commission now. I don't want to wait 2 years. I don't want to take the journey with you, as opposed to digging deeper. All of our ability to help serve customers comes with a lot of what if, what now, what when framing questions to dig deeper onto what's really holding them back.
No, it's kind of the funnel technique of trying to get to the actual fear or problem that you're trying to solve, right? For whether it's somebody who's looking to sell potentially or someone who's looking to buy potentially. If you do not buy or if you do not sell, what problem is not being solved? Are you going to be homeless? Doesn't mean you're still going to live with your ex-wife. Doesn't mean that you can't capitalize on the equity appreciation you have because inventory is really low now. So it doesn't matter if you sell later or not. There's not going to be a buyer. Like really asking those questions. I love that point because I think that agents typically talk so that they can respond instead of asking so they can reply.
Exactly. And Ryan, everybody on this call has that in their bag already. Like they've got to get to the core of that. It's how we get to the core of that is how we're able to build trust earlier in the process. The macro stuff that we started with, I'm a strong believer that every agent needs competency to walk through the macro dynamics so that it becomes clearer when we ask these appropriate questions. You do it all the time. You go on CNBC and other news outlets, and I see you in a 10-minute, 5-minute segment talk about the macroeconomics better than any housing expert that they bring on. And it's the same conversation you're going to have with somebody who understands that stuff on a $10 million, $20 million listing pitch. Every agent, every price range, every neighborhood in this country should have an understanding on that macro. It helps get you to the right questions and build the framework of where they should move forward.
What are the three websites that you're checking? Like what are you using for information to make you smarter?
On macro stuff?
Yeah, like what are your go-tos or publications or newspapers or apps?
Yeah, I did mention realtor.com a couple times. I do think they do a really good job. I mean, they're not winning the traffic portal war, but in terms of data, they're probably doing the best job. I know from a consumer experience, some people will lean towards Redfin, but if you're looking at the portals, Realtor is doing a better job delivering that macro data. And just the government, I know the government data is boring and it's PDFs. That's why in BAMX, we break that down into bite-sized pieces, because who wants to go through a 38-page PDF? But the government's putting out raw, hard data. Like when I talk about labor, it's pretty easy to understand, okay, today we hit 240,000 on the week for unemployment. We're not over 250 yet. We're not even close to that in the 4-week moving average. That's 230,000. There's some multiple weeks that have to occur before that becomes a trend. So I guess those would be the three sources: the .gov sites, Realtor.com, and HW.
Super helpful. Yeah, I think it's interesting and kind of how you tactfully go about absorbing information. You control inventory. You can ideally control your income. What do you think the top 1% of salespeople are doing right now to win listings in this market that most agents aren't even thinking about?
Well, there's two things. No matter what your emotional trigger points are with paying for leads, every agent in the top 1%, as you call it, is investing in lead flow. Doesn't necessarily mean they're investing in Zillow or Realtor or what have you. They are investing on generating leads. They're not just a salesperson who's waiting for somebody in their community to be ready to act through a connection, through a word of mouth. There are very few word of mouth agents that are left, and that's a 20, 30-year journey. So they are investing and buying on consistent lead flow that they can count on. That's number one. Number two, when they go into that pitch, they have a model for their business that is changing. They haven't built a listing plan 3 years ago that is static, that they keep whipping out the same PDF. They are tweaking it and changing it almost on every pitch to customize and personalize the experience for that particular customer and their journey. Or at the bare minimum, they're customizing it and tweaking it on a monthly basis just to speak to today's market and today's market conditions. So not having a model that you're pitching that continues to be customized and personalized, and understanding the investment on having consistent people to sit in front of and present that to is significant on a monthly basis.
100%. I think customer acquisition is the name of the game.